I think for quite a few people, this is one of the first live events that they're going to be joining. I know a lot of us are curious to see how Hong Kong FinTech Week goes this week with its live events and its hybrid events. But actually, for those of us teaching or studying at the universities in Hong Kong, we've been live all semester. Classes have been more or less normal, and it's been a busy place, a busy period. I think all of us, whether you're live in the room, and great to see some actual live faces in a room as opposed to staring at a screen of faces, or even worse, just a blank screen. And also, welcome to everyone online. This is our fifth Hong Kong U FinTech Day. And I was looking back over the past 5 years. And if I think about 2016, the beginnings of Hong Kong and Hong Kong U's FinTech journey, the establishment of SuperCharger FinTech Accelerator by Janos Barberas, who we'll see a little bit later. We ran that year live a FinTech seminar looking at RegTech, at regulatory and supervisory technology, a theme that we'll be looking at this year in day 2. And of course, Hong Kong U FinTech Day this year has extended to 3 days. If we look at 2017 Hong Kong U FinTech Day, we announced the launch of Introduction to FinTech. And Introduction to FinTech, for many of you online in particular, was one of the world's first online courses on FinTech. And today, the largest FinTech course on the edX platform. We crossed earlier this year 100,000 students in almost every country all across the world. We need a student in North Korea. If someone can get us a North Korean joining, we will be able to have someone in every single country in the world. We look at 2018. 2018, we announced the launch of the Hong Kong U edX Professional Certificate in FinTech, and the expansion to create 2 new courses, FinTech Ethics and Risk with David Bishop and David Lee, and also FinTech and Blockchain run by Professor SMU. And in addition, we launched something that for those of you here in the audience and certainly outside is very familiar. We announced the launch of the BASC, the Bachelor of Arts and Science in FinTech, one of the first undergraduate courses in FinTech launched anywhere in the world. 2019, we launched the launch of LITE. LITE is the Law, Innovation, Technology, and Entrepreneurship program run by Brian Tang, who will be with us tomorrow in the context of the second day. And we also announced the launch of the RegTech book, the first book looking at RegTech. 2020, we did the launch, the official first time that the Hong Kong U Standard Chartered Foundation FinTech Academy was involved in Hong Kong U FinTech Day. And I think the launch of the HKU FinTech Academy was a huge recognition of all of the work and development that we've put in at Hong Kong U and in Hong Kong in the context of FinTech. We also announced the launch of our first 2 MSCs, one run by the Faculty of Business and Economics, and the other run by the Faculty of Engineering, both of these on FinTech. This year, we'll have more announcements, but there are 2 things that I think that I really want to highlight this year. The first, that big thank you out to everyone for crossing that 100,000 learner mark on the Introduction to FinTech course. And second, the fact that we've launched the first Russian language version of Introduction to FinTech. And tomorrow, we'll be having a signing ceremony for the first Arabic language version of Introduction to FinTech. And I think what you're going to see across these 3 days. So today, we always start out with a big issue panel. We'll come back to that in just a second. Tomorrow, we'll be looking at blockchain issues, at RegTech issues. And on the third day, in a virtual-only panel, in Mandarin only, we'll be looking at one of our biggest focus areas, which is around digital finance and financial inclusion. And just before we turn to this first panel, I'd like to extend a huge thank you to my colleagues in the HKU Standard Chartered FinTech Academy, TW Lam, SMU, Chen Lin, as well as to Brian Tang with the LITE program, Ellen and all of her colleagues at Telly, and all of the support staff, Edith Yu with the FinTech Academy, Pras Laput, Dan Lai, and the Hong Kong U FinTech Association. Putting an event together like this takes a lot of effort, and it's really fantastic to bring the whole Hong Kong U FinTech community together in support of FinTech in Hong Kong and around the world. Now, I'd like to turn at this point and introduce my friends on the panel. And I think it also made me think about, looking back over these past 5 years, that actually all of this group had become friends as a result of all of these initiatives. So up on the screen in just a few minutes, we should have Janos Barbaros. Janos is the founder of SuperCharger Ventures. We have Ursula McCormick. Ursula is a partner at KWM, King & Wood Mallisons. We have Hui Yin Tru. Hui is co-founder of CFTE, the Center for Finance, Technology, and Entrepreneurship. We have Henry Arsulanian, global crypto leader for PwC. And joining me on stage here is Mushir Ahmed. Mushir is founder of FinStep Asia. And if I look back at some of these early sort of milestones, Janos, of course, was the founder of SuperCharger FinTech Accelerator. Henry and Mushir put together the first MBA course in FinTech, certainly here at Hong Kong U, at Hong Kong, and across the region. If I think of Hui, Janos, me, and a range of others put together the edX online course. And Ursula has been involved in not only each of these initiatives, but also across the course and a number of other of the big policy initiatives. So it's great to see you guys. I wish we were all live. We say that every year, and I guess at least this year, I've got Mushir.
We're halfway there now.
Live. So hopefully you all can see and hear us. We can all see and hear you. You guys have the disadvantage that even though we can see you and the audience can see you, you can't actually see the audience, but there is an actual audience in the room. So what I like to do with you guys when I get the chance is focus on what are going to be the big issues. And I think looking at two things. One, thinking forward the next year, but also thinking a bit more broadly. In other words, that as we begin to move around the world, hopefully beyond COVID, and if we think about finance, if we think about digital finance, what would you all say are the big issues? And maybe I'll just start with Hui on the end.
Thanks a lot, and thanks a lot for the invitation. It's a pleasure to be back virtually. This year. I hope that next year we'll all be in the same room. And as you spoke about, all the different initiatives, year after year, I think we're not getting any younger, but it shows that fintech has evolved over the last few years. And I think in terms of the big issues, there are three which I think would be important. And the first one is what I would call the institutionalization of fintech. Because as you remember, when we started a few years ago, fintech was really small. It was seen as perhaps this interesting new phenomenon for a lot of people. It's not small anymore. It's very, very big. So on the institutionalization side, in terms of the fintech startups, here, for example, in Europe, Revolut would be the 11th largest bank in Europe in terms of market capitalization. If we think of Adyen, for example, which has a valuation of 70, $80 billion, it's bigger than pretty much most banks. But it's not just Europe, of course. If we look at new bank in the IPO, which is coming next quite soon from Brazil, that will be a 40, $50 billion IPO. In Africa, we have companies like CheaperCash, Fori, Wave. So I would say fintech is not this confidential market anymore. It has been institutionalized. But so if it has been institutionalized, what about the other institutions, the financial institutions? And I think that what we've seen is that we've seen some of them being quite proactive and adapting quite well. We can think of the JP Morgan and Goldman Sachs of this world. I would say in general, what we see is that a lot are struggling to adapt, which means that the whole value chain of finance has changed and is changing. And in terms of the big issues, that means that in the next 5 to 10 years, the whole value chain of finance is likely to be very, very different, which it has started already, but that means that the largest players in financial services will be much, much more than just today's banks, I would say. In terms of the other big issues, I think we've gone through the first phase of what I would call the digitization of finance, cheaper, better, faster, doing the same, but digitally. Very, very positive, of course, for consumers, very positive for financial inclusion, for example. So extremely positive. Now I think we're entering the second phase, which is really digital finance. And digital finance, we can think of CBDC, NFT, but a very, very different way. So not just taking what we had and putting it online, but really thinking of finance, but purely starting from digital. That will, again, be extremely positive. One of the issues to be looking at, I think, is the regulatory side. And on this go, we have a lot of very prominent regulatory experts. I think that at the heart, fintech is still technology, much more than finance. And this is where we're starting, and we are starting to see this clash between this world of technology getting into financial services and finance, which is really regulatory driven. And so this is where I think regulation is starting to play catch up. It has played catch up. It is playing more and more catch up as we're seeing this innovation in digital finance getting faster and faster. So regulation, I think, will have a very, very important role again in the next few years.
Thanks for that, Lee. And I want to come back to some of those, but there's one point that I wanted to pick up, and it's something that has come up over the past year in a lot of regulator discussions, and that's increasingly the risks of the part of the financial system that are not digitized. In other words, how do you deal with the integration of non-digital into the financial system? And I think this is a challenge that we're seeing from the standpoint of a lot of developing countries. Janos, from your perspective, what do you see coming?
So I think fintech becoming systemic. So Tinkoff Bank 2-3 months ago has been deemed a systemically important financial institution in Russia. And they were very proud of this. They did a press release and they're saying now us being a systemically important financial institution means that we made it, which is interesting because most banks would like to avoid that because it brings more regulatory scrutiny, but for them, they were very happy. I also think it means they're going to get cheaper capital, but I think, so he says, fintech becoming institutional, I would say fintech becoming systemic, and all the consequence around that, that's a big trend. The second one is how, so the big tech entering financial services, this is obviously not fully yet understood. Because we've been looking at financial services in terms of product regulation, not really infrastructure. And the big techs they just want to be the infrastructure. That's very clear. And so if you were to push that reasoning to an extreme, what has been happening now is with Facebook and the metaverse. I mean, if you build a new world, you need to build a new infrastructure for its operation. Payment, checking, assets, and all of that. And I think suddenly it crystallized in people's mind. So bring back to regulation and regulators having a struggle to understand how to rein on in the big tech. I think yet alone this idea of what the metaverse is going to be doing in terms of payment, financing, etc. It's way too far ahead for that. So I think those are the old fintech becoming systemic and the new big tech just becoming even more out of reach, being one level of separation away from what this could really be. So there you go.
I want to come back to that point about size and scale, because I think it's something that you did a graphic a few years ago that's gotten a fair amount of attention, and it's a sort of spectrum where at one end of it you have too small to care, in the middle you have too large to ignore, and you have on the far end too big to fail. And this is something that I think we can say is moving at record speed. And if we look at the challenges of scale, this is something that I want to come back and talk to you all about in a few minutes. But Janos, you just highlighted something that I've been toying with, and I wanted to see if you have any thoughts on it so far, and that is finance in the metaverse. Anything interesting there?
We right now we're working with companies building metaverse, like actually global university campuses where you have a virtual house for medicine, virtual house for law, virtual house for this. I think finance in the metaverse is going to start with boring things, right? So how do you buy? How do you sell? Because you need to exchange something in that place, right? So I think it's going to start with payments. But as people will get more and more comfortable, then you're going to have this whole economy. But you had this before. You had this like 10, 15 years ago with One World, where people were financing virtual house purchases, online, was the equivalent of SimCity. I could imagine people trying to insure their virtual homes in the metaverse at one point. But I think it's going to start with very boring things, like what do you need to do there? You need to buy and you need to sell stuff, right? There needs to be that interaction, and payment will start, and then finance is going to just get more and more complicated. So I think finance in the metaverse is going to be super boring to start with. And as people get comfortable, then you start adding complexity and all of this. So that's how I think it would be, because you need a level of interaction first. So yeah.
Yeah, that seems to reflect what we've seen, is that payment really starts first, that people need to pay for things. And even if we look at Tencent and WeChat Pay, some of the early aspects of that are actually around the need to be able to make payments in gaming. And so I think it's a pretty logical space there. Let me just turn to Ursula. Ursula, in your crystal ball, what do you see for the next year and going ahead?
Look, so much, frankly. First of all, we're seeing at a very basic level a number of economies just making sure that they're actually their laws are fit for purpose in terms of making sure they can have electronic contracts, information, flowing, and that we're starting to remove those paper-based processes that you alluded to a moment ago, and whether that's paper you need for stamp duty in Hong Kong, or if it's the receipting requirements in the Philippines, but really finding those pain points that pose quite significant practical hurdles to digitalization. The next layer down is really finding the sort of regulatory pathways for risks that we all know and have talked about for some time. And that includes the rollout of the VASP related recommendations by the Financial Action Task Force for virtual asset services providers. And we've seen in the last couple of days a real appetite from the Financial Action Task Force to start to erode perhaps expectations that we might have peer-to-peer and DeFi remain outside of regulatory boundaries for some time, so that that time is ending, and we're seeing some quite concrete examples and of expectations that are coming. The next one is really about, of course, the second fuel other than perhaps money is data. And we're seeing a really strong level of focus on both the laws being fit for purpose, but also regulators in the privacy side having some teeth and actually pursuing outcomes that provide some meaning to those laws. We're seeing in that area of data real focus on it because there's such a scourge of ransomware. We're seeing data breaches every second day, and there is the this real importance of trusted identities in the digital realm, the need for sharing through trusted pathways. But what really interests me is also how technology is coming to support that, not just the law. And so, I'm really interested in how zero knowledge proofs, for example, might support the protection of data rather than just privacy policies that no one reads. Platform, we're seeing a real growth of platforms, and not just platforms for providing access to social media, but very much integrating payment solutions, disintermediating even some of the innovators. And I think that trend line will continue, and therefore also the response to that also is growing. And then finally, we can obviously talk about what that means in the context of metaverses, because I think that's very interesting how digital finance will respond in that environment and perhaps move beyond the boring and move to things like self-enforcing tools and strategies. But finally, the systemic risk considerations, we're really seeing quite, important dialogue around the new risks that are being created through digital finance and through digitalization generally. And that includes what risks we have when the internet goes down, what risks we have when there's no more cash, what risks there are when we don't manufacture our own chips anymore. So there's some of the key themes I'm seeing.
Yeah, just a few little risks there, I think. I think your point about the underpinnings is a really important one. It's something that some of the teams here have been looking at, and little things like e-signatures. How do you actually sign, or how do you prove an entity? And then I think we'll come back to some of those issues about platforms and some of the data questions. Mashir, over to you. We'll switch to someone live in the room from those on the screen for a few minutes.
Right. I think a lot going on, right? But two things that I would look at for 2022, right? Number one is the return of the telcos, as I call it, the comeback. If you look at FinTech originally, one of the best examples for both financial inclusion, but also using technology for finance was M-Pesa, right? That's, for me, is one of the modern examples of FinTech that we can actually talk about, which led to widespread, what the payments that are run through the M-Pesa network are high, over 50% volume of the overall Kenyan payment network, right? So you know that this can have a large impact. And now what's happened is, as we move from voice-based calls to data-based calls and the use of internet, 5G coming in, it's going to become quite important for those who control data pipes, right? And telcos are showing a keen interest in getting into the payments world. At least you have Tap and Go here, but the others, Virgin Money and a bunch of others globally, are starting to come back into this frame. So I think next year will be where it will be defined. The second piece is building on what Hui was also saying, which is on embedded finance, right? And all the banking as a service, payment as a service, etc. This is as a result of two things. One, banks realizing that they can no longer run everything on their own, and they're not safeguarded from market crashes or erosion of their client customer base, even if they are 1.5 billion people who are still to be banked in the world. But they have realized that they do need to come up and find strategies where they can compete with fintechs or partner with fintechs. So the launch of banking as a service from Standard Chartered, which has been at least a year old with Nexus. You had HSBC announce this with Oracle a couple of weeks back. So I do see that as becoming important. And this is embedded finance across, both on the crypto world as well as in the regular world, because everything needs financing, elements of finance, and technology is just going to enable it. So that's on one side. The second element, the reason there is having back on the regulatory side. Big techs and fintechs are realizing that it is no longer, there's no that gap between regulators trying to figure out what big techs can do or fintechs can do is narrowing significantly. Actions in mainland China in terms of cutting down the monopoly, data restrictions, use of data, etc., have now going to be a trend which will very soon be followed probably in the US, in Europe, and then the US as well. And what that means is a lot of the big techs are not necessarily going to be keen to chase regulatory licenses. The same will probably apply for fintechs because there can be a lot of burden. So this could become an ideal world where the big techs and the fintechs can partner with the banks already own the licenses, and then it doesn't erode the bank's customers, it brings them additional revenue, and in fact, this can become a major source. So this is the two things I would expect from next year.
Thanks for that, Monsieur. And let me, the point about the telcos is one that I've been thinking about as well. And, I think there are two sides of it. One, if one looks at sort of open banking in the EU, and I sort of try to think about the question of who is actually well placed to take advantage of this. And it's not the platforms, because the platforms are the target of it. It's not really the banks. And it strikes me as it may be the telcos. And I'll probably pass this back to Janos and Huy in just a second. But the second, and this is something that I've been seeing particularly around developing countries, and that is that there's a drive of what is often your second or third mobile telecoms company in a jurisdiction. The largest typically doesn't have that much motivation. They have a nice market position. But the number 2 or the number 3 player is looking for something. And very often they're looking for, they're often moving into finance. And I wonder if this is the sort of thing that you're seeing as well.
Yeah, you can see that in India as well, right? In India, it's actually driven by all three, but I think from India perspective, Reliance Jio, who first drove the data inclusion and democratization of data, where hundreds of millions of people are now online, have also now looking at building the fintech element of it. But you're right, it's going to be the second and third because the motivation is important. Another element to add to what Ursula was saying and linked to telcos is, in a sense, in a lot of countries, when you are taking a SIM card, because of terrorist threats and many other reasons, you need to do KYC. Right, and it's your identity, or address proof, etc., which is usually the basics of a bank account as well. So from that perspective, once you have a KYC done, plus add facial recognition or biometrics to it, then essentially you could run everything on the mobile phone, and you don't need to do double KYC, etc. The CDI and a bunch of other data initiatives that are going on will mean that that merges in. So even if you end up being a refugee in some other country, let's say, right, you have your original SIM card, you probably are now having some identity that's been established prior, and that can bridge you to your new identity. So that could be very interesting from that financial inclusion perspective as well.
Yeah, that's something that, I thought about it as well. If you think about this with, say, Apple Pay, the limitation was not the biometric technology, it was always the base ID.
Correct.
And so if you look at China's success with financial inclusion, much of it has actually been on the base of requiring national IDs and bank accounts for getting a mobile phone. And as a result, once you have a mobile phone, you're already cleared to do just about anything. And so if you look at sort of real ID verification for a mobile phone, it's the base.
It's the same in India now, right, with Aadhaar, so which is 1.1 billion people with a biometric registration. So when you get a SIM card now, you give your Aadhaar card that's validated, and then you go through. That's been a big push for fintech inclusion as well. So yeah.
Let me jump back to Huy and Ursula here on this telcos and open banking point. One, because in the context of some of the CFTE work, I know you guys are focusing a lot on open banking, and I'm curious, from your standpoint, who do you actually see, besides the individuals, who on the business side is actually best placed? And I'm curious, Ursula, because I think outside of the EU, Australia is probably the leader on this, and I'm curious what you see as well. So back to Huy first.
Yeah, no, thanks a lot, Douglas. As you know, I'm a big proponent of platforms, and I think that platform as a business model is an exponential model, and that's the reason why you have so many of those very, very large companies in the world which are now platforms. If we look at the big, at those who benefit from platforms, and I think it's really different, for example, in Europe versus, for example, Africa or India. But I wouldn't put, for example, the telecom operators as the big beneficiaries of platforms. I would say, who are the big beneficiaries of platforms in Europe? There are mainly 2 or 3. First, consumers, of course, much more choices in general, much more products. The ecosystem in general, so much more players in the ecosystem. But I would say the big beneficiaries are the new entrants and mainly the startups. And to take, I think, an analogy, This is exactly the same that we saw actually in the telecom space when we saw, Apple get into telecom with the iPhone and Android, just after that, which is in 2007 or 2008, for example, on the Symbian or Nokia platforms, you had a few thousand applications. Today, you have millions of apps on the Apple Store and millions of apps now on the Android, Google Play. And the reason is that's because of standardization, basically because Apple and Android help for standardization. It was much, much easier for anyone basically to create an app. Whereas before it was much, much harder. And now it's much easier not only to create an app, but also to access a very, very large consumer base. And this is exactly the same as we saw through PSD2 and open banking in Europe, which is now it's much, much easier for anyone to create an app, was basically an open banking app, was before it was much, much harder to have to connect to one bank and a second bank and a third bank and etc. So the big beneficiaries is the ecosystem in general, where we'll see where we have seen already much, much more new entrants getting into financial services through open banking. And because of that, it's not unthinkable to see exactly the same as we saw because of Apple or Android, which is basically a WhatsApp, which was a 50 people company being acquired for $19 billion, basically leveraging on an existing platform. And this is, I think, the same that we're seeing in banking today because of open banking.
Ursula.
Yeah, look, so I think the CDR, so Consumer Data Right project in Australia has been really interesting and perhaps reflective of a greater understanding that we ought to place some rules around who can access data, and that there is an anomaly with the current system where you can place $1 on deposit with a bank and that bank has to keep a lot of capital to hold your $1, but we can give our biometrics to anybody and there is nothing really there to properly guard that. So, the CDR reflects that need to have trusted entities that hold data and can share data, but it has evolved. And so most recently, the changes that were implemented last month or the month before that in September related to enabling more people to potentially participate under representative or sponsor models. And really the sorts of examples that we're talking about is being able to share information with an advisor or a mortgage broker, an insurer, an accountant, a lawyer, really people who need access to all or certain data to be able to provide services to you and to put that in the hands of the subject matter of that data to be able to decide who to permission. But besides that, like not just relying on consent, because I think consent is quite well recognized to be a flawed model.
Thanks for that, Arsene. Let me bring Henry in. Henry, what do you see coming?
First of all, great to have me on board, and thanks for all the students who made time to come to this annual event that we have right now. And probably one of the most exciting week in Hong Kong. It's great to have you guys here. I think when I'm looking ahead and what's exciting me really for the months ahead are some actually elements that obviously some of our panelists discussed. But actually, what's really moving very fast are like three areas that I'd like to talk about. One of them is what's happening in the field of decentralized finance. Today, we're talking about these big platforms that, like, as we mentioned, the big intermediaries are in the middle where they're trying to standardize data. But we're seeing complete boom right now in the field of DeFi, which is literally the delivery of financial services with no intermediaries. So even like, for example, right now, you're able to go trade cryptocurrencies, for example, get borrowing, lending, even get insurance and asset management in a completely decentralized way. And I think that's going to be very interesting for a lot of the big financial institutions. We're talking at the beginning, Janos was mentioning that they're not ready potentially for FinTech. Well, I can tell you they're definitely not ready for DeFi. So it'll be definitely very interesting to see how that interaction happens, how much interest there is from that perspective. A second big thing that I'm watching is really what's happening with the world of Web 3.0. As we know, we all started with the internet, the Web 1.0, which is Netscape and Easy. It was websites were a bit like the Yellow Pages. You would go, it was very static. We went to Web 2.0, which is what we have right now, where we have social media and actually some of the challenges that we just discussed in the last couple of minutes on data privacy and others. But we're really moving to an era of Web 3.0, where literally me, if I'm producing content, I will get automatically rewarded for a content that I'm putting out. If let's say I was putting such a video of this talk on YouTube, I will automatically get paid for what I'm doing. And actually you as viewers, you'll get paid for spending some of your eyeballs, your precious time listening to what we're saying. And I think this is very amazing, because right now where the value is being created with these not only tech platforms that you mentioned, and telcos and financial institutions, but this really becomes in a distributed fashion to the people and the public. And I think that's going to be very, very exciting to watch. And really what empowers this is all the world of DeFi, smart contracts, and blockchain technology. And third thing that I'm watching, which is very, very sexy this week, with Facebook changing its name from Facebook to Meta, is really what you alluded to earlier as well before, Douglas, on the metaverse. Which obviously the metaverse, as many of you know, is really when you're able to interact in virtual worlds with your avatar. And I really believe this is going to give rise to tremendous opportunities in the same way the internet gave, not only, frankly, new talent, arts, but also financial services. I mean, just to give one example, just one of them. One of the projects in Hong Kong called Sandbox, in Cyberport, that's not far from the south of Hong Kong. There's Sandbox has already $500 million of virtual real estate. These are people renting virtual real estate because as a metaverse, Henry Metaverse that walks around it, I want to see it, I want to interact in location. As any good Hong Kong investor knows, matters also in the metaverse. So I think it's going to be very, very interesting to see what's happening. There's areas of Web 2.0, the metaverse, even DeFi, are moving way, way faster than even my best case scenario that I had. I think this is going to be very interesting. And to bring it back to the digital finance and tech platforms, if a lot of financial institutions and frankly, a lot of legacy institutions are not able to understand what's happening in fintech, these changes coming in offer a completely different experience. For example, why we could maybe have students learn about fintech in a metaverse, in these virtual universities. I think this may sound a bit crazy and maybe stupid, but it's definitely closer than many people think from that perspective.
Yeah, no, I think on that last point, it's something that Janos is definitely seeing in the ed tech space, that idea. And certainly from the standpoint of universities, all of us are realizing that we don't want to give up all of the online experiences. And so how can we bring the sort of online, offline together? I kind of want to bring a couple of those big picture things and kind of throw it all out to all of you for your views on it. And that is, if you think about the past decade or so, we've kind of had two different big trends in finance. One, and Henry highlighted just recently the 13th anniversary of the Satoshi white paper for Bitcoin. One has been decentralization. And so we see this most recently in the evolution of DeFi, of decentralized finance. But at the same time, we've seen this real trend as a result of economies of scope and scale, of network effects with data and technology, towards centralization and concentration. And so, if we're thinking about the next decade in sort of a battle between centralized and decentralized, and if you take the metaverse, Henry, one version is it's a bunch of different separate pieces interacting with each other. Another version is that it's an ecosystem owned by a single player. And so how does this play out over the next 10 years? Decentralized versus centralized. And where does this leave governments sort of in the middle between the two? And open to anyone who wants to grab that one first. Mushir's got his mic up.
I think it's a bit like evolution in nature, right? We have both systems of centralized way of operation between packs and all of it, and then you have the decentralized version where people are go and hunt on your own, right? So you have these two versions, but I feel the next decade is not necessarily going to make it very clear cut where people want to go. I do feel there is a large amount of people who do want to look at the DeFi world. They like peer-to-peer, going back to the way we probably evolved initially. But there are quite a significant number of people who prefer the security of a centralized body, right? It's either cultural, it's risk appetite, it's a multitude of reasons. And I guess Hong Kong is a classic example of, in some cases, when you looked at banking and the virtual banks came in, a lot of people were like, I'm not sure if I want to go in with for virtual banks. And these were people who were educated and everyone else, or even for fintech, because I don't know if I can trust this tech company to be there in the next 5 years, and I don't know them, but I know HSBC's been around for a year, 100 years or 150 years, whatever there is. So that trust element is important. But another element is what happens when everything goes sour. The last 10 years have been one of the most economically prosperous decades, in history when it comes to stock markets and capital gains globally, right? And yes, Bitcoin has seen its shares of falls and rises, but the percentage in terms of absolute value is now it's at 60,000. The previous crashes were not as significant if it does fall down now. But what happens when there's a crash? What happens then? Right? That is going to be an important test. And I think for the future of DeFi and crypto, it is important that we have a big crash in the next 2-3 years. I'm not predicting one, but I do feel that it'll be very important to kind of clear out and say what next, right? How will this pan out? What governments are going to do is what FATF is effectively leading them to do, which is trying to control all elements of tech, all the way from big tech to DeFi, because they realize that systematic risk is now spread out and it's no longer centralized, which is preferable for them, which is what they disseminated. But there's elements of decentralization even in the non-blockchain world, right? And that, I guess that's where they need to look at it, because if there's a systematic crash, what happens for the general public who are not probably tech savvy or not quite engaged? So it is going to be a very tricky decade, but I do think having a crash in crypto is going to be very good for everybody.
So what we need is something like 2001 and the crash at the end of the dot-com
Yeah,
bubble.
kind of. I mean, we saw that mini crash during the ICO boom, right? And I think that was very helpful in weeding out all the two people writing a white paper for, using internet copy and paste to actual big projects coming through, which we're invested in. And one key element that not many people have spoken about is fintech funding is at an all-time record high, both from a VC funding perspective, but also IPOs funding raised, right? And the number of IPOs, which means there's a lot of money that has gone in, which is going back into the ecosystem to build out the technology and enable all of this to happen. So that's where the strengthening is happening. But on the other side, you did need that crash in the ICOs for better projects to come through or shine through.
Anyone out there in the screen?
I think on the when we're talking about the metaverse, the way I think. First, I don't think it's a winner takes all, right? It's most likely going to be an oligopoly. I mean, Mark Zuckerberg, he has to be credited for having really a bold vision. I mean, it's a listed company worth, almost $1 trillion, and he goes, no, now we're going to change our name. We're going to go to, the online world. But he didn't create the metaverse. The metaverse existed, for the last 10 years, different ways. And I can imagine how, for example, education wouldn't want to happen on the Facebook metaverse. So I think it's more going to be an oligopoly situation with big players working. But I think the real risk there is, I mean, we talk about Web 3.0, but we had this, right? Like, remember when Apple said there's an app for this? I think the risk is Google and Apple bringing the cost of hardware to zero to really own that virtual world. Because to access metaverse, you need hardware, you need devices, and having whoever will own that hardware will be the one owning. It doesn't matter then if you're the oligopoly or not, right? You just are the gateway into it. And I think this is where you're going to be having it. I think a player like Apple doesn't need to say the type of metaverse they want to build. They just need to build the hardware to access it, and they win all across. So the hardware race, I think that's what's going to be the real threat for competition, because I think otherwise you're going to have, it's like branding, like on B2B and metaverse, you'll have an oligopoly, like 10, 15 big players. Look at social networks. Yes, you have Facebook, but you also have LinkedIn, Pinterest, you have the one in China, you have the one in Russia. So I think you're going to have the same fragmentation one more time. Big players, 10, 15 worth, $1 billion or $1 trillion. But whoever owns the hardware, I think those are the one to watch out for, because they have the cost to just subsidize it. And we've seen this with phones. There's two big players now, right? There is Google, Android, and then, I mean, there's China, Huawei, and what they're doing. And then there is Apple. So that's free. And they're really the one owning payments, content, subscription, anything that you want on the back of it.
And that's where the scale comes in, and we kind of see this. Bashir raised the Reliance Geo model earlier, which is basically to subsidize the hardware down to almost nothing on the basis of the income that you're going to get from dominance of the data and the services. And of course, that's a business model that really benefits those who already have the scale.
I just wanted to quickly put in a couple of words. I mean, the Reliance just released their latest phone, just less than $50 US. It's smartphone and quite useful. But I was just going to come back to Yanis makes an excellent point about the fragmentation that will occur. There'll be oligopolies, but it'll be in different parts, right? So like but the key element there again is telcos. Effectively, the bandwidth is controlled by the government. So where does the government control come in? If they're not going to give the spectrum, you can have, you can't do 5G, you can't do 6G, whatever we go forward to. So that's where the squeeze will come in, where the regulators, it's no longer going to be so much so operational in silos, where the financial regulators are operating silos, telco regulators are operating silos. They probably will have to merge in some senses, and the government is going to control that. So now if you're going to want to get into a Chinese metaverse, you need access to it, and vice versa overseas. India has, data localization laws. So for the metaverse, does that need to be, the cloud servers based locally? What can you do on that metaverse, and what can't you do? So that's going to become very important from a fragmentation perspective. But governments control the telecom bandwidth almost in every part of the world, and that's where that control will continue for the new world. Yeah.
Let me take us in a little bit different direction, because of course this week is COP26 in Glasgow. If we look at this decade, clearly sustainability from all of its different aspects is one of our biggest challenges. And I think one of the good news aspects of COVID is that finance, and in particular digital finance, this time hasn't been part of the problem. Instead, it's been really core to the solution. And I think if we're thinking about sustainability crises going forward, it's really clear that digital finance is key to resilience. But what I want to ask you all is from the standpoint of sustainability widely, and of course we can think about the UN Sustainable Development Goals, our target is 2030, or focus in directly on climate change and biodiversity, where we have direct targets from the standpoint likewise of 2030. What can digital finance actually do to help us transform the world? We'll go in reverse order. Henry, you're up first.
First of all, I think it's very interesting that COP26 is happening this week, of course, and I think we cannot underestimate the importance that being sustainable has for not only for the future of finance, but frankly for the rest of humanity as well. I think in many regards, digital finance broadly plays a very positive role. I mean, I'll give a very simple example. Let me use cryptocurrencies again. I think it's a very good controversial topic to give as an example. We all talk about Bitcoin mining being bad, for example, consuming a lot of electricity. What we often do not talk about is how, for example, Bitcoin mining could actually encourage the development of renewable energy. For example, as following the China ban, a lot of the Bitcoin mining has moved to the US. One thing people often are not aware in the United States, for example, there's a surplus of renewable energy. The problem being there's no buyers, or often the grids are not able to take it on. When you produce electricity, there needs to be a kind of a funnel to go to the city, if you want, where the main grid of a city can take it. What we're seeing right now is a lot of Bitcoin miners, for example, go next to that source of the renewable energy. Solar panels, for example. As you all know, you consume a lot of electricity in the morning, you don't use it as much during the day, and you consume a lot at night. The beauty with Bitcoin machines, you can turn it on and off. So when there's actually less demand from the public, these Bitcoin machines can come on and actually buy that electricity, which makes them buyers of last resort, which makes renewable energies more not only sustainable, but also more profitable. So I think we need to look at this as part of the broader conversation around renewable energy sustainability and how we can use not only digital finance, but a lot of verticals of digital finance, crypto mining just being one of them, and how we can help us achieve our goals of making the world more sustainable from every different angle.
I think it's a conversation for a different time, but I think actually one of the biggest challenges for Bitcoin going forward across this decade is going to be the energy model. I think that may very well eventually lead to a shift from the standpoint of preferences of users, and that may be an existential point that at some point will be unavoidable. But we'll leave that one for a different time. Ursula.
Yeah, look, I'm particularly interested in how the tools and techniques of digital finance are helping support the sustainable development goals through sort of new and interesting ways. And of course, we can't underestimate the importance of access to finance for itself in addressing poverty and addressing hunger, addressing access to decent work, which are all part of the goals. But what I particularly like is now that we're starting to see the application of really interesting tools from digital finance, whether it's the use of analytics or its use of blockchain for provenance of medicines, of food, because often the questions of meeting the sustainable development goals aren't, of course, a question of supply, they're of distribution. And so I really like the fact that we're developing new tools and techniques within digital finance where they're profitable to generate and apply them to perhaps more real world or perceived real world challenges. The other things are things like being able to distribute, create community-based, energy systems, that also ties in with what Henry was mentioning. Or it's just fueling circular economy platforms that mean that we consume less. And so we're addressing another sustainable development goal of reduced consumption and production. Or we're leveraging the techniques of DeFi for better governance and voting mechanisms. And again, that supports one of the SDGs. But I think one of the most pressing challenges actually is how we grapple with this new era of potentially greater prosperity of, around basic needs, and how we continue to move up, what was sort of neatly described in Maslow's hierarchy of needs. And this real question of purpose, and we're seeing this a lot around work and meaningful work. So when you have digitalization of business, what does that mean for meaningful work, for purpose? What does that mean for people's lives? And I think that question is a particularly interesting one, and no doubt that we'll see again some interesting examples coming through from digital finance, particularly in things like using blockchain for non-fungible tokens that allow people to capture value and ongoing value in things like art and content that they generate. So, those are the sorts of things that I really like to see, where we're using those tools and techniques from finance and bridging those out into broader applications.
I really like that point about it's not necessarily supply issues, but distribution. And certainly that's something that we can see very clearly with global supply chain issues right now. And definitely, each crisis causes us to look at something in more detail. And if you think about 2008, it made us understand the shadow banking system. And if you think about what's coming out of COVID, in addition to sort of health issues, one aspect that it's causing us really to dig into is global supply chains and to develop a much better understanding of how those work. And I think that digital will play a key role in that going forward. Mushir.
I was just thinking about what could be very important for sustainability in the going forward. And I think Henry touched upon, the Bitcoin in terms of renewables, and it's actually very true. If you take a look at places such as in Mongolia or Central Asia, etc., these are very remote. The grids, etc., don't extend, so that's where the renewable energy can be used, and Bitcoin miners were going there. Now I'm going to take a flip side to take a turn from there, but talk about, I think the key element that we will see happening potentially is tokenization of green finance and making it effectively accessible for all. And I mean, in the sense, we're starting to see elements of that. So when you are traveling on a flight, you have these tools which tell you how much carbon are you burning, what's your contribution, etc. But what if that could be tokenized completely, right? So when you walk or you plant a tree or whatever, you get rewarded for it, and you use that for carbon credits, and you exchange that for whatever carbon excess that you may have. I think that's going to be something that is now feasible using both blockchain as well as the element of the focus that many people are putting on green finance. Now they have the large scale where probably this year is a record year for green bonds, including for Hong Kong government in terms of issuance. But now if you can take it down completely, into an individual level, that could be something that could be quite revolutionary, but also something that is very much in sync with what quite a few millennials and Gen Z look at as sustainability. Right? Everything they do, they want to look at how sustainable they are. If you can mix the two, that could be quite wonderful.
You know, actually, this brings together, I think, some of your points, Ursula's points, and Henry's points, which is that one of the challenges around carbon impact, for instance, has been in the context of actually giving an amount for each thing that you're doing. And if one thinks about what we're doing in the context of global supply chains, the same ideas apply from the standpoint of disaggregating the real carbon costs of different aspects. And of course, taking it to the blockchain side, both tracking that, but also monetizing and charging that, I think is really key. Janos.
I think sustainability to me is it's a bit of a it's kind of a second birth for a lot of fintech companies. They in the last 10 years they've been able to grow their user base pretty much organically with limited marketing, and then it stopped, right? And so you Revolut or you are Robinhood or you are, so what's the new trick? What's your fourth blade razor that you're selling? And I'm not saying it in a negative way. I just think that there's been a bit of a green rebranding on fintech because there's a demand, and because I think fintech companies are faster to provide it. And that's good because it's educating the people, right? So people are starting to realize, okay, so I could invest in something that has a positive impact on the planet on top of making a return, et cetera, et cetera. So I think retail faster than institutional is making the move. But the reality is there's a company called Docotomy. Essentially, it's a credit card spending. So whenever you spend, it estimates how much carbon emission you do, which is very hard to do, but they estimate, right? So if you take a plane ticket, it's worth $150. Most likely it's a short haul flight, therefore you're going to produce 2 tons. But if it's a $1,000 ticket, then it's a long haul flight, therefore you produce, 10 tons. The thing is, what those guys realized, it was a credit card that was providing carbon emission tracking on your spending, but they didn't scale. Like, they got 10,000 users, and that didn't really change the planet. But what they start doing is partnering with Nordea Bank, partnering with BNP in France. And then suddenly you have 100, 200, 500,000 people coming in. And then after, what they start realizing is, why don't you put Microsoft employee credit card on this? And now suddenly it's another 400,000 employees. So I think the green rebranding on fintech, it's raising the awareness of the market on retail, but the real move is going to be when institutional money comes into it. But I think the reality of fintech startups doing green is mainly because they hit a stop in acquisition of users, and they had to change something. And green was the easiest thing given the target demographic of their user base, which is, I want something that has a purpose. And they came out with this trick to get more people out of it. So that's how I'm looking at ESG. So very positive. I'm just being very practical about timing of when those startups released it.
Yeah, no, I think there are two sides there. One is this idea about there's so much money going into ESG investments, whether you actually have greenwashing, a bubble, et cetera. But the second actually goes to something more potentially impactful, and that is, if we think about what we've seen with meme stocks, meme coins, the empowerment of individuals and movements. And basically, if one thinks about digital finance providing a tool where people can direct those interests into worthwhile targets, then that is actually potentially incredibly powerful. And that, I think, is something that we've just seen over the past year, this real sort of digital finance movement and its potential impact. Over to you.
Yeah, I think, Douglas, you mentioned 2008, and I think 2008 is interesting because we saw people voting with their money, basically. And there were, of course, consumers, who are, a lack of trust in the banking system in general, in central banks, and that's why we saw, crowdfunding, peer-to-peer lending, Bitcoin. So we saw basically, consumers wanting something else, and what they didn't want was the old financial system. At the same time, we saw a lot of fintech startups, basically, building on this, and with pretty much the same, the same momentum. What we didn't see was, of course, financial institutions that were pretty much for the last 10 years trying to play catch up with this fintech phenomenon. For sustainability, I think that, of course, everybody agrees on sustainability. It's very hard to be against. But what do we see today? What we see today, we don't see the same at all. And I would argue that consumers, fintech startups are pretty much laggards in this. And I would say financial institutions would be the ones which are innovating in the space. And I give you some examples. I think the example that Janos gave is a very good example. A lot of fintech startups are putting green on the basically on their marketing, but it's more or less marketing. I would call that more or less marketing rather than really what was at the core of what they of their mission. A few months ago, we asked hundreds of our alumni what they wanted to learn. So we asked them, what do you want to learn? And some of the very, very predictable answers would be, we'd like to learn about artificial intelligence in finance, in fraud detection, blockchain, Bitcoin, et cetera, et cetera. Almost no one said anything about sustainability. So amongst all of them, almost no one said anything about sustainability. So we asked them the question, which is, how come that everybody seems to be very involved in sustainability? If you look at all the very large banks and asset managers and hedge funds and regulators, everybody's talking about sustainability. But how come that nobody asked anything about sustainability? Because they didn't really see the link between what they were doing and sustainability, between their job and sustainability, whether they worked in a large financial institution or a fintech startup or tech companies. They didn't really see how they could have any kind of impact in terms of what they do and sustainability. And so I think that what we're seeing now, which is very, very welcome, is all the very large financial institutions having this ESG sustainability mission in terms of having an impact on the planet, which is great, and a lot of money is being put in there. There's still the part which is missing, which is the people side, I would say, the people, employees, and really being able to make the connection between what I do in my daily life, what I do as an employee, and how I can make an impact. And at the moment, it's not clear. So hopefully, we're going to be able to solve that, quite quickly, because without this link, it's going to be hard to make a real impact.
Yeah, I think that's a big point, and one that I've been thinking about a lot on the digital finance side. I know we're over time here, but since we've got an actual audience, I'd like to give them the opportunity just to ask one or two questions before we wrap up. So anyone out in the audience, questions for any of our panels? Yeah, I'm not going to take an online question, but I can get a live one. No. There we go. One hand.
Hello. Hey, thank you for the panel. This is a great rock star group up here, and it's great to see people in person. Just want to say that. So I just have a question for the group, and I mean, probably Ursula may be best to answer this, just the nature of the question. But one of the challenges we see, and we talked about it a little bit here, is kind of, I guess, advancing regulatory models or policy models to kind of adapt to fintech, and maybe another way around, fintech adapting to regulatory and institutional policy models as well. I guess there seems to be a gap, though, between some of the things that are happening in the DeFi space and some fintechs who are just pushing the limit and regulatory arbitrage. How do we improve the engagement between the two parties, both the policy side and the fintech market side? And then what kind of ways can we do that?
Yeah, great questions. Thank you. So first of all, there is a real challenge in finding the right response that recognizes that we're grappling with something that is potentially a little bit different to just another traditional financial service being added to the mix of things to regulate. And, there's some new challenges, including the very aspects of decentralization and automation, which I should say really exists on a spectrum. So, you look at any DeFi project and, by and large, most are not truly decentralized. Most, don't use, the degree of automation that they might wish they do. So, but at the same time, it's still finding that right model. And, in one of the projects I was working on with the World Economic Forum, we were looking at the fact that if you seek to overreach on code development of itself and code that can be used for multiple purposes, then you're starting to really reach a level of oversight that is perhaps inappropriate for this arena. And so we really need to think about when is it that code is so dangerous or so risky that we need to intervene, and when is it that we need to look at what the right governance model is. And there's some really interesting analogs that you can look at, right from finance through to how opium poppies are regulated, right from seed through to production and distribution. So, that challenge, though, I think is starting to be met. And that is through also recognizing that regulators have a role to play in looking at how automation, how AI, how big data analytics should be regulated, how kill switches should operate, audit, responsibility, liability, all of that. So I think the confluence of finance, of automation is starting to build a little bit more of a picture of what that regulatory response should be like. But I think one of the most powerful things is for the collaboration between industry and regulators to be able to offer the technological solutions to some of these problems rather than always a heavy-handed regulatory response. And whether that's through the use of self-regulatory avenues and industry type work, or it's actual technological tools like we're starting to see through the recouping of hacked funds in DeFi exit scams, for example. So I think that combination of industry informing and being front and center is extremely important to be able to meet that challenge to those actual risks. But then finally, I think we also need to be honest that there is always an element of residual risk when we create regulation. There's always risk that we decide we're comfortable with. And that's the area where innovation also occurs. And so really enabling that space to still remain to be able to drive growth.
Fantastic. Anyone else?
Yeah, happy to chip in here. It's an excellent question on DeFi, and I think it's one of them that everybody has trouble grappling with. The reality is actually that I think I'm sure if you ask 95% of DeFi projects out there, if they could stay unregulated, of course they would. They're not idiots. The reality is one risk that we're facing right now is we may have two parallel universes. One is the crypto ecosystem that is with centralized intermediaries, with all these different regulatory rules that we have the travel rule where everybody has KYC, that they know who you are, and the entire DeFi ecosystem that is operating in parallel. The problem we face is, as you all know, a crypto is traceable. So right now, an exchange knows when a token is coming, let's say, from a DeFi platform. I think there's a very big risk of if there's not everybody doesn't put water in their wine, if you want, and even the DeFi protocols become a bit more conscious of some of the risk involved with decentralization, they may be completely operating outside the kind of what is more or less mainstream. One thing I think that may be driving is there's increasing levels of institutional investor interest in DeFi. Again, something that has moved way faster than I expected it. I think that's one of the risks we have to look at, because today, let's look at a very simple example. If you're a criminal, if today you're a criminal and you're buying Bitcoin on Coinbase, you're an idiot. However, today, if I pretty much guaranteed, and everybody knows it's in crypto, every single criminal organization and others can only use DeFi. That's the only tool available right now. You'll be idiot to use a centralized one. And until the day you need to actually cash out and move to fiat. So I think it's going to be very, very interesting to watch how it happens. We're already seeing some of the large DeFi platforms. Aave is a good example, Uniswap as well, where they're trying to interact more with regulators. Some of them, the reality is they have a physical presence in the US if they have no choice. But I think this is something we're going to see increasing happen over the next couple of months from that perspective as well. Great question. Thank you.
Brilliant. And I think that's, unfortunately, the note we're going to need to wrap up on. First, I'd just like to thank my friends Henry, Ursula, Janoswi, Henry and Mushir for joining us today. It's been great to see you, great to talk to you all. as always. And thanks to everyone here live in the room for joining. It's always great to have a room with real human beings. And thanks to those of you out there in the digital world for joining us. And hopefully we'll get to see you all again soon. And remember, this is just the first day of HKU FinTech Day, and actually just the beginning of Hong Kong FinTech Week. Thanks, everybody.
Thank you, Dan. Thank you.
Thanks for having us. Thank you.